Folks, power of sales are up 55%. I'll get into that and then the latest home prices and insights for the City of Toronto for week ending March 27, 2024. Thank you to the many of you that have subscribed to this channel, but there's still lots of you that come here every single week. You enjoy the content and you've not yet subscribed. Consider subscribing. So, power of sales, they are up. They're up over 55% this quarter versus the same quarter a year ago. That's a lot. That's a huge increase in power of sales. A lot of us expected it. Lots of people have been talking about power of sales are going to be on the horizon. That's what we're seeing today. Now, the whole power of sale process can be devastating. It's already a negative situation. You can't make your payments. The lender takes over the property and sells it on your behalf or on their behalf. It depends on how you're looking at it, but somebody else, not you as the homeowner, you've lost all power. You're not, someone else has taken it over, your lender, and is selling your property. It's not a good situation. It's actually one of the most financially devastating situations to be in. But power of sales today are very different than power of sales years ago. Years ago, we sold a property for the lender. Well, we sold it for the homeowner, but they were under power of sale proceedings, and there was equity in many properties back then. When they were under power of sale, there was value in the home still. It went into power of sale because set of circumstances with the homeowners, they couldn't make their monthly mortgage payments, and the lender took over the home and sold it. Sold the property, paid off the lender's expenses and bills and legal fees and all sorts of other fees there, and what was left went to the homeowner. And we saw lots of that happening years ago. In any market, there's always going to be power of sales. It's a little bit different in this market because, yes, there's people that can't make their mortgage payments, but their home has negative equity. So even when the lender takes it over and goes to sell it, there's a good chance there's still going to be money owed. That's what complicates it today. That's why you're seeing power of sales. You could see them on the MLS. Some of them are not selling. It's not that buyers are not putting in offers. It's the lender is got to sell it at such a loss, they're not even going to recover their money. And then they've got to go after the homeowner for the difference. How are you going to get water from a stone? It's just not, it's a complicated process. So I urge you, if the writing is on the wall and you see power of sale approaching, you see that you're not making the payments or you're going to have a difficult time and you just see your situation not improving, don't wait for the lender to take over your home and sell it under power of sale. I promise you it'll be way worse if the lender does that than you selling your own property. We've helped several people this year sell and kind of basically fight off the whole power of sale proceedings. We've sold it just in time. On one situation, the seller had to put money in after the sale in order to close the deal. So the seller, not the buyer, the seller didn't have enough to pay off the mortgages so the buyer can take over. So the seller put in money. As bad as that situation sounds, it's still way better, much more preferable that the seller does that than the lender taking over your property and selling, because those expenses will shoot through the roof. The amount of fees and expenses incurred when the lender takes over the property is astronomical. So you're better off doing it yourself. Now, I know there's going to be situations where many sellers, homeowners are just, what can I do? I've got no money. I can't do this. I can't make the payments. And they're just kind of washing their hands in the whole thing and, be what may. But if you have any kind of power control over the decision process, it's way better to, especially if the writing's on the wall, to sell the property ahead of time before the lender takes over. Now, the lender, let's talk about them for a second. There's the typical mortgage lender, well, the banks. Their power of sale proceedings, it's all set up, organized. They've got their system that they follow. There's no deviation. It's straightforward. They're going to take your property, their lawyer is going to contact you, and your property is going to be sold. Then there's the private lenders. We're seeing a lot of these out there where the private lenders are getting a bit creative in the whole power of sale proceedings, and creative in their, to benefit them. We've seen properties that are kind of half under construction or in a process of being renovated go into power of sale, and then the home sits there and doesn't sell. And we've seen the private lenders buy the house and finish it. We've seen private lenders buy a property that doesn't need renovation. It's just the seller is in such a bad, the homeowner is in such a bad situation where the lender has purchased the property as an investment for themselves, for their own business, and rented it out. Maybe they're thinking the market will be so much better in a year or two and we could make a profit then. Because they know if they sell it now with negative equity, they still have a hole they got to fill. There's still a problem there. And what are they going to do? They're going to go after the homeowner? Some of them will, but the other ones that are thinking a bit more creative will look at that investment and think, you know, if we bought this and we held on to it for a while, at some point the market will turn around. We can actually make a profit versus a loss right now. Banks, they don't have that kind of leeway. Private lenders, they have a lot more creativity as to how they want to deal with the whole situation. So, in conclusion, if the writing is on the wall, sell while you are still in a position to make choices, because those choices need to be made. And either you make them or someone else, the lender, is going to make them for you. If you get value from what we're talking about, subscribe. If you feel this video can help somebody you know, pass it along. And if you want to speak with me about your real estate situation, it's really simple. Up here, there's a link to my calendar. Below in the description, there's a link to my calendar. Click on that, book a time that's convenient for you, and we'll talk about whatever's on your mind. Now, let's get into the numbers. Folks, lots of talk about here. Let's start off with power of sales. From time to time, I'll update everybody with what's going on with the amount of power of sale properties that are out there. So this is for all the GTA, all home types, all power of sales as they are listed on the MLS system, on the Toronto MLS system. You can see for January, 87, February, 69, March, 56. So you could look at this and say, oh, power of sales are dropping. And that it's definitely in the first quarter this year, each month we have fewer of them. However, when we look at the first quarter of this year compared to the blue, which is the first quarter of a year ago, last year, we have 55% more power of sale properties this year, first quarter, versus last year, first quarter. A few months back, we talked about 2022 versus 2023. We had an 108% increase. Power of sales more than doubled from 2022 to 2023. And the first quarter of 2024, we have 55% more than we had first quarter of 2023. Let's look at a different chart. This is still broken down by month. This is now for detached properties for the city of Toronto only. By month, I've got March 2024 here. and highlighted in black, March 2023, all the way to March 2020. Let's look at a few things here. If we look at sales, 648 detached properties were sold this March 2024 that just passed. 648 is the lowest of the 4 years going back to March 2020. It's low. 648 is the lowest March we've seen in a few years now. Let's look at average sold price. Average sold price for March 2024 for detached properties just in the city of Toronto, it's almost 1.7 million. It's 1,692,000. Compared to March a year ago, to March 2023, 1,692 is 6% lower. So we're, it's almost the same. It's not that much of a difference. So we're 6% lower. Compared to March 2022, we are 11.7% lower in average sold price. So we're down, and the 2022 was kind of peak season. We haven't heard that word in a while. Peak, peak, peak. Well, March 2022, January, February, March was when we had peak pricing. We are 11.7% down when it comes to average sold price from our peak back in March 2022. And we can go back further. I'm going to just skip and go right to March 2020. We are 15.2% higher in average sold price versus March 2020 price. And if we want to go back one more, we're 15% higher from March 2020. The current average sold price is actually 33% higher from March 2019. It's not on the board here, but we are 33% higher than March 2019 average sold prices. What does this all mean? It's numbers, it's information. But let me tell you something here. I put a line, I looked at all the average sold prices, and basically, generally speaking, I put a line here, January 2021. If you purchased before January 2021 and you were thinking of selling, there's a good chance you're going to make some money. There's a good chance you have positive equity if you were thinking of selling. If you purchased after January 2021 and you're thinking of selling, there's a good chance you have negative equity, or maybe you might be lucky to break even. So January 2021, before, you've got positive equity. You're making some money on your home. January 2021 onward, if you purchased after that, it's a good chance you're going to lose some money on the property, or maybe the best you could hope for is to break even. Now, this is generally speaking. Every situation may different pockets in the city of Toronto behave different, appreciate differently. This is not a hard rule, but generally speaking. Let's look at our regular programming, broken down by week. I've got condos, semis in towns, detached properties, and if we kind of go back to middle of January, in most cases, prices for detached semis in towns and condos have actually increased over the span of the last 2.5, 3 months. The difference between the average condo price and the detached price, it's $938,000. There's a big gap between condo and detached average prices. We're going to start off with City of Toronto detached. Sales, 162 were sold for a week ending March 27. Sales are trending up, not by a lot every week, but generally trending up. 35 of those detached properties sold at $2 million or more. Average sold price sitting at $1,671,000. I would say prices are trending up. We're going to take a closer look at that. But compared to last year, 1,671 is 6% lower than where we were this time a year ago. The median price of 1,410 is 1% higher than where we were this time a year ago. I threw myself off with what I noted there earlier, but here's what I'm getting at. So January, February, just to the beginning of March, it's pretty clear. Average price and median prices were trending up. Pretty clear. But now we've got March. 1, 2, 3. There's 4 weeks so far. And I'm looking at it thinking, which way are prices going? Because they do bounce up and down. And the dotted line, which is a 4-week moving average, it's kind of flat in the March period. It's difficult to say which way prices are going. Maybe they're going to stay flat for several more weeks. It's really tough to say. Prices were trending up. Now, not so sure which way they're going. 162 were sold. Something that is very clear that is trending up is the percentage of properties selling at list price or more. That percentage is increasing. 68% sold at list price or more. That's a high percentage. Listings. Well, active listings were trending up, but they came down this week. So did the amount of listings. 245 were listed. The previous week, 368. So listings were trending up. They also have come down. Months of inventory sitting at 1.6. It is down from the previous week, but we can go all the way to the beginning of February. 1.5, 1.6 was the norm as far as months of inventory goes, and that's where we are now, 1.6 months of inventory. Here's Toronto broken down into 9 different neighborhoods or 9 different areas. And we're saying that for all the city of Toronto, months of inventory is 1.6, sold at list price or more is 68%. Well, let's look at some of these areas that are overperforming or underperforming the whole average. Scarborough, I'm always looking at Scarborough here just because it is one of the most competitive parts of the GTA. Well, if all Toronto's 1.6, Scarborough is sitting at 1.2 months of inventory, so it's way more competitive. 71% of the sales in Scarborough were at list price or more. Let me just say, if 71 are sold at list price or more, it's going to feel like most of the listings, probably 90% of the listings coming out are being listed with an offer date in mind. Not all of them are working out on offer night and being sold. Some of them will then be relisted at a more traditional type price. But man, I got to tell you, if you're shopping, looking for a house to buy in Scarborough, almost every listing is going to feel that it's listed with an offer date. So that's Scarborough. East York, Riverdale Beaches, 0.9% is the months of inventory. Extremely competitive. 83% of the properties sold were at list price or more. That's going to feel like almost all of them. High Park. Look, there was only 10 that were sold, but months of inventory is at 1.3, very competitive. 80% of those properties sold at list price or more. So different neighborhoods, different pockets, different buying experiences. Here's semi-detached properties. 61 were sold for week ending March 27. 13 of those sold at $1.5 million or more. Average sold price, although it's down from the previous week to $1,291,000, it's pretty clear prices are trending up for semis. The average sold price versus last year, there's no percent change. The median price is 6% higher this time versus a year ago. I just finished saying it's pretty clear prices are trending up. And now I look at this chart that has the 4-week moving average that kind of smoothens out the peaks and the valleys. Well, yeah, we were trending up, but over the last 4 or 5 weeks, it's kind of flat, the prices actually. Months of inventory, 0.9%. That is an extreme seller's market when we're looking at semi-detached properties, and 77% sold at list price or more. Here's townhouses. I'm going to say it again. Looks like prices are trending up. We'll see when it comes to the 4-week moving average, but kind of looks like to me prices are trending up. Average sold price is $1,281,000. These are freehold townhouses. 15 were sold. 3 of those were at $1.5 million or more. The average sold price is 7% lower than where we were this time a year ago. The median price of 1,355 is 5% higher year over year. And the dotted line here, the moving average, trending up right across, right to week ending March 27th. Months of inventory down from the previous week, sitting at 1.9 months of inventory. Here's a summary of all the months of inventory. Detached, semis, towns, pretty much a seller's market. Different neighborhoods, different property type. Towns is kind of a little bit higher up, but semis at 0.9 and detached to 1.6. It's pretty low. I don't think you're going to experience a buyer's market in, I don't know which area right now. I haven't seen any that are buyer's market type categories or type of markets. You may in some areas experience a balanced market, but for the most part, especially if 68% of all detached properties sold at list price or more, chances are it's going to be a variation of a seller's market, either extreme seller's market or lukewarm seller's market, if you want to call it that. But it's pretty much going to be a seller's market wherever you're shopping for a detached or a semi in towns. Thanks for watching. Have an awesome day.